San Diego home sales hit a 27-year low as high interest rates keep buyers on the sidelines.
Yes, let's take a look at what's happened over the past few weeks, and then we'll zoom out for the longer term trends. Okay, so new listings are what feed the market, the new product, and that is up 3.3% from September to October, so a few more new listings. Pending sales are down 3.9%, and this has led to an overall increase in the number of homes for sale, but not that many. Closed sales up 2.2% from September to October, so from super low to not quite as low. And then 14.8% on the number of homes for sale. That's the increase, which again is from not very many to a few more.
A few more.
And then the median price down 0.06%. So
another little dip. All right, well, let's check out the yearly trends.
Okay. Let's take a look at new listings. So this is the number of homes listed for sale in October 21, 22, and 23. And as you can see, the trend has been down. October 21, we were concerned things were looking low, and then it just got worse from there. And that's detached homes, attached homes, similar trend. Although for some reason we are seeing a bit of a bounce in many zip codes with condos. I don't really understand exactly what's going on there, but in lots of zip codes I've been looking at, there are more condos for sale than there are detached homes, which is interesting. Usually that just follows right along. So a little point of difference there.
We'll have to get to the bottom of it and get back to you next time.
Yeah, any of you condo owners, give us a call. It's a good time to sell a condo.
Or let us know in the comments what's going on.
Yeah. So then, of course, we look at the 10-year chart here, and as we like to talk about every month, things were really pretty regular pretty predictable until we get to 2020, and then
things went all 2020.
Yeah, they did. Although it was after everything that things really got wonky. Last summer is where this thing really went off the rails, and of course,
some might say it's the hangover from the stuff that happened in 2020, and after that, now that interest rates are coming home to roost. And
yes, well, anytime you have a big event, everybody expects that the economic impact is happening right then, but it generally isn't. There's a lag time, there's a hangover. So that's definitely part of what's happening now.
Yes, well, let's look at something else.
Okay, good.
I'm tired of looking at this new listings chart. Let's move on to closed sales. Not a whole lot more fun to look at.
Closed sales are just as much fun to look at almost. Here we are in 2021 with the market humming along, and this represents a decent amount of sales in a month. Everybody's working. All the ancillary industries are chugging right along, and then bam, 2022. It's cut in half, almost in half, and then even a little lower here in 2023. It's just, this represents volume. This is the number of transactions happening, and the number of transactions happening are what make people work. Real estate agents, lenders, title people, escrow people, termite people,
carpet folks, painters, roofers, plumbers, electricians.
Yes, I mean, you name it, everyone is slower because of the volume. And that's where people ask, well, market's doing great, right? Prices are still strong, prices are one aspect, volume is something we never really thought a whole lot about, but apparently when it goes down, things get tough. So that's what's happening now. Even in 2008, it was ugly, yes, but the volume was high, and so the engine was being primed, and things were moving along.
Well, let's look at something else. Maybe the next slide will be more fun.
By the time we're done talking about each one of these.
Let's have a fun slide.
Yes, okay.
Inventory of homes for sale.
Yeah, inventory of homes for sale. Yeah,
that's a little more fun.
Yeah, this is, somewhat of a bright spot. We have been seeing inventory building up a bit, but again, it went from very, very low to just kind of low or really low. So, it was at a fairly crisis level in, 2021. There were, very few homes on the market. more last year. This time last year, things were cooking because we had the leftover inventory from the summer rate increases that had stacked up, and then things were just humming along. And now, of course, we have more homes for sale, and they're being absorbed relatively quickly. And it's not enough to really drive prices down or volume up that much. But it is more, so that's good. Buyers have more choice.
All right, well, how about median price? Let's see what's going on with median
price, of course, has been up throughout this whole time. And here we are in October of 2023 at $964,000 median for a detached home, and $667,500 for an attached home. And this is up just slightly from last year. So we're just kind of holding our own here in terms of median price.
And it is, even if you look in the past couple of months, it's trending downward a bit.
A little bit, yes, and that's no surprise really, because we do have more homes for sale. Interest rates have been really, really ugly, so pending sales have suffered. And so that does create a little more competition, a little softening of prices in the marketplace. So overall, we are down roughly 3% from right here in what was this, August, September? Yeah, August. So August is the most recent peak, and that's what we were saying back in August. Is
we told you guys, this is it.
We're going to enter a little bit of a softening here. And whether or not that reverses or not, can't really tell you. And that's one of the things I tell people all the time is, we're pretty good at telling you what's going to happen in the market in the next few weeks or a couple of months. Don't ask me what's going to happen next year. Is it going to crash? Is it not going to crash? Because nobody really knows.
Well, it's like predicting the weather.
Yeah.
If you know about weather, you can predict fairly reasonably, out a week or maybe even 10 days or what. But a couple months out, how could you know?
Right.
You could guess, but you're likely to be wrong.
But the numbers that we're discussing here are a pretty good indicator of what's coming in the near term.
Yes.
So that's what's happening with median price.
All right. Are we ready to talk about interest rates?
Oh, yes. The funnest slide of fun slides.
And hey, this is more fun than the interest rate slides we've been seeing recently. So we're down a little bit from the last couple weeks. So
Yeah.
I never thought I'd be excited about 7.5% average rates, but I guess I'll take what I can get.
It's a little movement. The Treasury yield went down, which pushed rates down, and global events have an impact on this. The stock market has an impact on Treasury yields. There's all sorts of things that go into this soup. But last week we were at 7.76.
And this is from Freddie Mac.
Yeah, Freddie Mac 7-day average. So last week 7.76. We peaked out at 7.79, and then trending down the last 2 weeks, which is good. And it would be nice to see it keep trending down. Although I think it's I don't know how much more down we have to go right now. Hopefully more, because this will drive more sales, more volume, more people working, better economy overall.
Yes. All right. Well, is that it for today?
That is it for today. We'll be back next week with more neighborhood real estate updates, San Diego Market Watch, and all the shows that you love to watch.
All right. Well, thanks for watching. If you enjoyed this content, please like, share, and subscribe, and we'll see you next time.